Let's take a look at the broad markets. DXY strength. I did tweet that, and I saw some people putting out that this looks like a top. I said I don't know about that because it's in a very strong uptrend, and just by the way that I analyze the market. Let me go throw back on here some of my other moving averages. I had turned some off. I was really focused on the 111 lately. So I'm going to stay focused on the 111 really is my main anchor, but the 50-day obviously. But if you look at the DXY, I've got a weekly chart up here. It never really got significantly below the 50-day moving average, and it just kept trucking its way up. And I got this breakout, parabolic trend line, and obviously we came into resistance. This is kind of historic resistance, especially this swing high right here. Throw that on there for you. So as we came into that resistance, I said, look, yeah, I see everybody saying that we came into resistance. I said on this side of this sell-off that we're coming into resistance. It's probably going to go ahead and roll back over. That's what I was thinking. That the Fed was not going to be as drastic as they ended up being. But when I saw it bounce off of this, it never really broke down this parabolic trend line. That's when I said, you know what, never mind. It looks like it's consolidating under resistance to me more than it looks like it's going to want to roll over. So we closed meaningfully below. You see the weeklies. It never really convincingly closed below the 50-day moving average for that matter. And it never broke this kind of breakout trend line. So in my book, it was just consolidating under this resistance area, and it's wanting to, do that consolidation below and break back above it. So that's what I think is going on here. I think we're headed for another 0.5 interest rate hike. So if the interest rate hike is indeed another 0.5, expect market weakness to continue. My target used to be this area that we're in right now was my original sell-off target when we lost that uptrend. I don't know if y'all recall, especially on the NASDAQ, I was looking at this right there. I had this ascending wedge pattern on the NASDAQ, and I said, hey, should we get the ascending wedge pattern? This is exactly my area with the target. And the NASDAQ chart started to show a descending wedge, and I thought maybe we're breaking out of that. But that really bad CPI print last week just was kind of the nail in the coffin. So it looks like we're just going to continue this pattern on downward here for a bit. So these were my targets originally, this range and that range there on the SPX. We'll see. The 200-week moving average, speaking of 200-week moving averages, happens to be around 3,500. I did tell somebody recently that I thought that 34, this prior all-time high over here, 3,400. I feel like 3,400 SPX is probably max pain politically. For the Fed and people that want to get reelected. I think that they'll have to reverse course right around the 3,400 because it's going to be making enough headlines. But we'll see what's the greater evil. Is it still inflation by that point, or is the pain, the perception of pain in the markets? Now, obviously, the only people really hurt by this, broad market equities markets coming off like this are people who are close to or in retirement that still have their money in equities, or people who work on Wall Street, so or day traders or what. Well, I guess day traders probably be fine. They're probably playing this on the downside, but but there's only a handful of people that really care about this number. But it makes news, and people see especially the Dow Jones is the one that you see on the TV all the time. That thing makes it down 28,000, closing that gap at 28,000 was kind of like my max pain target there as well. Obviously, we have that gap right there. So close this little gap here at 28,000 on the Dow Jones, which is, again, what the news always likes to make light of. Whenever you listen to the talking heads, they're always talking about the Dow Jones for some reason. So we'll see if we can hit that region. Anyway, but if broad market weakness, we get to those levels on the broad markets. Crypto is a speculative asset. It's going to continue to be risky.